Our agenda. The first item is the Redevelopment Agency Fiscal Year 2010 Interim Financials. The second item is the Fiscal Year 2010 First Quarter Interim Financials. And we'll start with Mr. Bossy today. Brian.
Actually, if you don't mind, Mr. Chair and members of the committee, Bob Stamaro, Interim Finance Director, just quickly want to indicate that for the Redevelopment Agency, we are primarily here to answer questions, and of course, Brian Bossy will be handling that. With respect to the city's quarterly report, we do have a more formal presentation to make, and Rudy Livingston will be taking care of that. So with that, I'll turn it over.
I looked at them in detail, Brian. I didn't see anything that bothered me. Does any of the other committee members?
No, I'm happy to move the interim financials for the RDA.
Is there a second?
I'll second it, just noting the 25, is that on? Yeah, with 25% of the fiscal year, I was kind of concerned about the revenue only having 4%, but then I realized it's the redevelopment agency and that you get those property taxes a little differently. So when do you get caught up? Is it in January after the December?
Madam Mayor,
Yeah.
we get revenues from our tax increment in December and April. So
Okay,
that's why it only
beginning of
shows.
December.
Yeah.
Okay. Okay.
So you'll likely see that in the January report.
Okay.
It's a bit behind.
Yeah.
Okay, it's been moved and seconded. Are there any further questions or comments? Not. All those in favor?
Aye.
Aye. Motion carries. Mr. Samario.
Mr. Chair and members of the committee, I just wanted to make a couple of comments. As you know, the quarterly reports that we bring to the Finance Committee and Council are usually a little more extensive than just the monthly interims. And so this report, we are going to cover the first 3 months of the year. However, the report will probably be a little lighter than normal because we've spent a lot of time talking about the revenues this year. In fact, just last week, I believe we had an item before Council where we approved adjustments to the budget, including downward adjustments to revenues in light of the changes we've seen over the last several months. So we're going to sort of recap for you what's going on in the first 3 months, but really the news isn't that different than what we already heard. So, so we'll make it fairly brief, and then with questions we can wrap it up. Okay?
Great. Thank you very much. Proceed.
Okay, Mr. Chair and members of the Finance Committee, my name is Rudy Livingston. I'm the accounting manager for the city. And as Mr. Samara indicated, I am here to present a little bit of information on the results of the first quarter operations for the city of Santa Barbara. We'll start by discussing the general fund revenues. Now, I want to point out that the revenues that we're seeing in this report are based upon the numbers that actually existed at September 30th, 2009. Now, subsequent information has been obtained, and has resulted in a reduction in budgeted revenues that actually Council reviewed and approved last week. So we've lowered our budgeted tax revenues, and I just wanted to bring those up real quickly to recap what was approved by Council last week. As you can see in the slide there, the sales tax revenues decreased, and our budget sales tax revenues decreased by a little over $1 million. We reduced property taxes by $434,000. The utility users taxes went down by $326,000, and the budgeted TOT was reduced by $675,000. Those numbers are not reflected in the schedules that we have in the agenda report today.
Ms. Falcone?
Rudy, just for clarification, these are still projections. These are still estimates. These are not based on actual monies that have come in. So these are not actuals. These are still what we think is going to happen, and we think that sales tax is going to be off by $1 million, and therefore we've revised the budget down to 17.
That is correct.
Okay.
We do
it's
not
not
have
based on money that we've seen actually either come in or not come in. It's projections based on what we think the trend is.
Did you want to?
Sure, and I'll just add to that, that's actually true, but we do, of course, factor in what we have received to date. We do have the September 15th information for sales tax for the quarter ended June 30th, so we're obviously relying on that to help us. But primarily, we are relying on the State Department of Finance's projections for the remaining fiscal year to make a projection. So you're right, it is just an estimate for
I
now.
guess my point is that I wouldn't want anybody to be misled or confused that we are down yet another $1 million. We think we might be down yet another $1 million, but that hasn't come to pass yet. It's just a point of clarification since over the last, 2 years, but certainly over the last 5 or 6 months, numbers have been thrown around, some actual, some projected, and it's very hard to keep track.
You're right, numbers can go up and down.
For the public.
Yep. Definitely. Now, I'm not going to spend any time on this discussing that because you had the discussion last week. I just wanted to bring that up for reference only. So we'll move on, and I'll reiterate these numbers are what was actually there at that time. Now, in our comparison of the schedule here, we compare our budgeted revenues to our actual revenues, and the budgeted revenues for the taxes are based upon a 3-year average collection rate through the first quarter of the year. It's not a straight 25%. Now, the other revenues besides taxes are based compared to a 25% benchmark. Based upon that information, at September 30th, we had received $19.3 million of revenues, and this is compared to a budget of $20.5 million year to date. So this resulted in almost a $1.2 million negative variance. There are 3 non-tax revenues that I want to briefly discuss today. The first one is the use of money and property. This is shown as being almost $122,000 ahead of the year-to-date budget. I don't want people to jump up and down and say, yeah, we're doing great. There's some reasons for this. One of those is that we received a $98,000 interest payment from the waterfront for a loan that we had made, that the general fund had made to them. So that contributes significantly to that. Additionally, this was conservatively budgeted, and as we go throughout the year, our higher yield investment instruments will be maturing, and we'll be replacing those with some that will be lower yield as the rates have been continuing to go down. And so we'll just see how that goes throughout the year, but we expect that revenues are going to approximate the budget at this point in time. The next one I want to mention is the intergovernmental revenues, which is $461,000 below the year-to-date budget. That is primarily mutual aid revenue received for fire department calls. Now, I want to remind everybody that this is actually when our firefighters go out to help other agencies when they're called up for mutual aid assistance. This is not stuff within our own city, and so we receive reimbursement for the cost of sending them out plus an overhead amount. We have billed a significant amount for those calls that we've made, and we have yet to receive most of that revenue this year, and so that's why we have that negative variance at the first quarter. I want to remind us, though, that this is virtually impossible to project how we're going to end the year, because this totally is dependent upon fires and the number of mutual aid call-ups that we have during the year. So we will keep you posted on this one as we proceed. Fees and service charge revenues are $345,000 above the year-to-date budget, but $160,000 of that is due to library revenues that we receive from the county. Those are semi-annual payments, and so it kind of throws things a little bit out of whack. Additionally, community development is running a little bit ahead of the year-to-date budget, about $185,000 for things such as permit fees, plan checks, records management, and those things. A portion of that is related to the reconstruction effort that's going on as a result of the fires that have occurred in the city. And it's really too early to draw a definitive conclusion as to where we'll end up, but right now things are in the positive area there. The last thing is the one that I always have to mention it because it's such a confusing thing, is that anticipated year-end variance. I know the committee members fully understand that, but if the public is watching this, they can get confused and say, oh my goodness, we're short $340,000 there. This is strictly a budgeting tool that we use, and this is a combination of what we anticipate to have in expenditure savings as well as positive revenue variances for the course of the year. We do not receive any payments on this, and there will always be a zero in the year-to-date actual. It's strictly a budgeting tool. So we'll move forward with that. And unless there are questions on this, I'll move to the general fund expenditures. Okay. The table that is in the agenda report, and do you have the expenditure? There we go. This compares the budget to actual expenditures for the 3 months ended September 30th. We've shown a comparison in here with and without encumbrances. Encumbrances are, as you well know, are things that are planned and even purchase orders that have been issued that will be utilized throughout the remainder of the fiscal year. And so when we only have 3 months of the year expired, they can really throw things off. So our discussion here will be based solely on the numbers without the encumbrances.
Rudy, before you proceed, one question
Sure.
on that. When I was at UCSB, we used encumbrances maybe a little bit differently. There were things encumbered that eventually didn't ever show up, and they were canceled during the year. How would you describe that in the city?
Yeah, that's exactly, that happens here with the city too. One of the things that we use quite often is a thing that we call blanket purchase orders. And rather than getting a purchase order every time we want to go down and buy some tools from ABC Tool Company, we will enter into a blanket purchase order agreement with them throughout so that our people can go down there and make purchases throughout the year. Some of that may never occur. We may budget $100,000, for instance, and they may only need $50,000 throughout the year, and at the end of the year, that remaining $50,000 would be canceled. And that happens with professional services and other things as well. So, yes, definitely. Overall, if we look at it, expenditures were almost $2 million under budget. A portion of the savings is purely due to the timing of salary and benefit payments. We have had 25% of the year is expired, but we've only had 23% of our pay periods occur in the first quarter, and that evens up throughout the year. Additionally, the departments are really keeping an eye on expenditures. They knew that we were going to have some reductions last week that we enacted with those budgeted revenue reductions. We also had to offset that with some expenditure savings. And we knew that that was coming. So departments have really been keeping an eye and trying to keep those numbers down. These things will even out throughout the year. We'll see. We don't know exactly where we're going to end up at year end on the expenditure, but we will keep an eye on that throughout the year.
One thing that does jump out, however, is the Parks and Rec item.
Yes, actually, I was going to discuss that and the non-departmental, because those are over the year-to-date budget at September 30th, and that is actually quite a common occurrence with Parks and Recreation because they have so many summer programs where they have a lot of front-loaded costs in the first month or two of the year for those things in July and August, and that usually evens out throughout the remainder of the year. Also, the non-departmental expenditures are over budget by approximately $69,000. That's primarily due to debt service payments that are semi-annual, and also the Fiesta and 4th of July celebrations that occur in the first quarter. So that kind of heavily weights those things. And those are the only things that I wanted to call out on this particular schedule. Bob, did you have?
Mr. Chair, just wanted to point out that the variance of almost $2 million, as you know, last week the budget adjustments we had council approve involved reducing the expenditure budget by about $1.5 million, primarily related to vacant positions and savings we were going to capture this year.
Right.
So in future reports, like the next quarter's report, you'll see that variance likely to be substantially lower because we will have lowered the budget to reflect those savings, and that was what we did last week. So we're basically capitalizing on a large portion of that variance already, and so that'll be reflected in future reports.
Yeah, in fact, the first report where that will show up is the November interims, and so then we'll see that through the remainder of the year.
Ms. Falcone?
Just to put it in slightly different terminology, and if this is wrong, let me know. But encumbrances, as you just explained, are basically receivables. The money hasn't come in yet.
No.
Explain the difference between that, because
Yeah.
it's not as though it is like a lien on a piece of property.
But not too far off.
Yeah, encumbrances are actually the opposite. Instead of receivables, they're essentially payables. They're things that
expenses, yes.
Yeah, we've entered into an agreement to perform or to purchase something, and so we have a purchase order where we say we will
Just haven't
purchase
put out
these
all
things,
the
but
money.
we have not done those
It's a credit
things.
card now.
Yeah, you can look at it that way in a sense, especially when we're talking about the blanket purchase orders.
Yeah.
Those are things where people who are authorized can go down and make those purchases as needed. Some of these things we estimate and we know For instance, the city attorney's office may estimate that they're going to need outside legal counsel of, $200,000 through the year, for instance. And so they, based upon history, they may know that may be what they anticipate spending, but it's not a sure thing. Some of these things are hard and fast, though, and we will have those expenditures occurring throughout the remainder of the year.
Could you get a little more detailed, and I don't want to go for some whole laundry list of stuff, but administrative services, I understand some of the other ones, the high dollar ones, but administrative services, is that
That's primarily
it's the election cost and because we put the FAS on hold, right? The billing system on hold?
Yes.
Okay, so that's associated with the election.
Yeah, and the election costs, those
Okay.
have incurred, in
Right.
October, November, and so those at September 30th were still outstanding.
Okay.
So that's a very good example of what
Yeah.
we're talking about here.
Okay, thanks.
Yes.
Hey, Rudy.
Okay, we'll move now to the enterprise fund revenues. The report that we have included that you see, and also what's included in the agenda report, is a listing of the enterprise fund revenues compared to the year-to-date budget. Now, with the enterprise fund revenues, we use a 3-year average collection rate also to try and capture seasonal variances in these revenues. And so that's what we use as our baseline comparison. And so when we're talking about variances, that's what we're talking about compared to that baseline. At September 30th, only the golf fund fell short of the year-to-date budget revenues, and they were approximately $112,000 under that number. There's been a nationwide downward trend in the rounds of golf played in recent years, and the current economic difficulties have further have sped up that downward trend, so to speak, and it's dropped off significantly. But one of the things that we notice on the right there is you'll see that there's a drop-off in revenues of almost 18.5% from the prior year. And one of the reasons for that is this huge slide started actually after the first quarter of last year. And so the number of rounds is significantly less now than they were. But the other thing that's happening in the first quarter is that we have a couple of major construction projects going on out at the golf course, which have impacted the number of rounds that people are playing. Water fund revenues are running.
Before you leave that point,
Sure.
just a related point. Some 25, 30 years ago, everybody built tennis courts,
Yeah,
and then everybody stopped playing tennis.
yeah.
So stuff happens.
These things are somewhat cyclical in nature to a degree. Yes. Water fund revenues are, as I was starting to say, are approximately $493,000 above the year-to-date budget. And there are two primary factors in this number here. First of all, there's been some increased water usage as a result of the extremely dry conditions. And when I say increased water usage, that's increased over the amount that they were budgeting to be used. Additionally, we have increased reimbursements from partner agencies for water treatment costs that we've been incurring out at the Cater plant that are reimbursed by Carpinteria and Montecito Water. And so that also has factored into that positive year-to-date variance. Those numbers will be running probably a little bit ahead of budget throughout the year, and we'll just keep you updated on that. The waterfront fund revenues were $157,000 above the year-to-date budget, and there are two primary reasons for that. First of all, slip transfer fees, which were significantly depressed last year in the first quarter. They just about dropped off to nothing. Those have come back, and we've actually had more of a normal year. And so we had a very conservative budget for the slip transfer fees, and we've far exceeded that year-to-date amount thus far. The other thing that adds to that the positive variance is parking revenues for the waterfront have been up because of a rate increase that was enacted recently also. Airport fund revenues were approximately 8.8% lower than those of the first quarter last year. And the reason for that is primarily it's in lease revenues. We lost two major tenants out at the airport, and they anticipated this, and that was actually built into the current year budget. So that's why we don't see a significant variance with the current year, but compared to the prior year in the first quarter, it drops off quite a bit there. Also, We have had reduced passenger activities, which is no surprise with the economic downturn, and those reduced activities affect almost everything associated with the terminal, including parking revenues, and so that's the other reason for that drop-off from the first quarter of last year. Those things were anticipated when they made their current year budget, and so, like I say, that's why we're more in line with the current year, but it's off kilter from last year a little bit. The last thing I want to talk about is enterprise fund expenses. All of the enterprise fund expenses except golf fund are below the year-to-date budget at September 30th. There are a couple of common reasons for these variances here. One of those is the salary and benefit savings that I mentioned previously because of the timing. Another common reason for the variance in these enterprise funds is due to the timing of the actual expenditures for material supplies and services throughout the year. Those don't always recur ratably, but more as they need them, and so they anticipate these things well in advance, they budget them, and then as they need them throughout the year, they incur the costs, and so it's quite, it's actually somewhat normal and usual for them to have variances in that area in the first quarter particularly. So it's really too early in the year to predict where exactly we're going to end up. So we'll just have to keep hold of our hats and see how things go as we go through the year here. But I do want to address a couple of the major variances that we have. Water fund expenses were about $1.2 million below the year-to-date budget. Approximately $274,000 of that was due to the timing of payrolls. The rest was those expenditures for material supplies and services that I talked about. The wastewater fund has $111,000 favorable variance. A portion of that is related to debt service payments, which are semi-annual, and so they're not 1/12 throughout the year. And $151,000 of that is attributable to this payroll timing. Downtown parking, they have the same issue with $123,000 of the timing for payroll. $125,000 of the savings is for the materials and supplies. But if you look at the right-hand column, they're down 17.5% from the prior year. And the reason for that is primarily that we set up a new downtown parking capital fund this year. And so we've moved all those capital expenditures out, and so that makes that significant variance from last year. As far as airport fund, and they're similar to the other ones, golf fund expenses are over the year-to-date budget, but this is due to primarily to the timing of construction costs out there. They have the master, what do they call it, the master safety plan going on out there, and they're working on some changes, some issues with Las Positas Creek, and so those costs are running a little bit ahead. They're not on an annual basis, but by the end of the year we should be okay with that. And the waterfront expenses are $636,000 under the year-to-date budget, but $295,000 of that is related to debt service payments once again. That's all that I have to provide today, and I'd be happy to answer any questions that you may have.
Okay, I have some. Both the committee members do. Mayor Bloom?
That'd be great.
Yeah, just if you could just, the downtown parking expenses, I didn't quite follow that. I know we took money out for capital, but wasn't that accounted for in the budget, or didn't we?
Yeah, that's a really good question, Madam Mayor. Chair Horton. What happened with that is we used to account for all of our capital expenses and all of our operating expenses in one fund. This year, we split those out, so we budgeted capital expenses in one fund, and we budgeted our operating expenses in the regular fund that we've had. If you look at the variances there for downtown parking, it's reasonably in line with our budget for the operating expenses. But compared to last year, it's off by 17% because last year we had included in that fund the capital expenses.
Got it. I
So-
forgot it was year to year.
Yeah, right. So that's a year-to-year comparison.
Hey, Madam Mayor, does that take care of it?
That's it,
Ms.
thanks.
Falcone?
On that same fund, the expenses, the revenues that have come in is 1.737, blah, blah. It's 2.2% below what it's the expenses are 1.764, which is a difference of $26,000, which may not seem like a lot in the scheme of things, but you multiply that by 4 if the trend continues, and you get, $100,000 or thereabouts. So what do you attribute that to? And is it this moving of money around that we're calculating it differently, or are the parking revenues down compared to its actual expenses?
If you that's a really good question. If you look at the numbers, as you indicated, the downtown parking fund revenues are approximately 26% of the annual budget. That's what we've received. The 3-year average for this period is 24.7%. So we actually have a $67,000 positive variance in the revenues.
But my point is that the expenses year to date, the actuals,
Right.
exceed the revenues by 26,000. I'm wondering if it's the beginning of the year, or is that pretty standard and it'll even out at the end, or?
Actually, that's the expenses in that fund. They are incurred as they are needed. So we budget it, and so they don't always hit 25%. We have not seen anything from the downtown parking folks that would indicate at this point in time that we have a major issue outstanding. So that's a good observation that you
Just
make.
multiplying by 4.
Exactly, and that could come out kind of ugly, but we are keeping an eye on that. But we have not heard anything from them that is a major indication of major problems.
If I could, if you look at the budget for the downtown parking fund, we budgeted revenues of about $6.8 million. We budgeted expenditures of almost $8.2 million. So we know that expenditures are going to be tracking throughout the year higher than revenues, and that means that we've essentially budgeted the use of reserves primarily for capital. So that was part of the adopted budget. So to look at the revenues and expenses, tracking, you're always going to see expenses higher than revenues, because by the end of the year you will consume those reserves that were planned for capital.
But let me follow up and bring in something that is not usually part of this conversation, and that is, and refresh my memory because it's not particularly sharp on this, we charged the downtown parking fund with some additional charge just this last spring. There was a big brouhaha about downtown parking not wanting the charge. We imposed it on them anyway. Had to do something with the waterfront. It had to do with, moving monies around and allocations and responsibilities and so forth. Is that additional burden, whatever that was, Jim, I can't remember what that was, but is that additional burden factored into these numbers as you present them today?
The numbers are factored into the expenditures budget for sure. And I don't remember whether those, for this year, they were planning on using reserves for that or a portion of revenues, but it's certainly reflected in their operating budget expenditures of $8.2 million.
Jim, could you
Mr. Armstrong.
refresh our collective memories on exactly what's going on here with this?
Yeah, we asked the downtown parking to pick up, I think it's approximately $200,000 of the cost for maintenance downtown, but on the revenue side, the RDA is going to pick up $200,000 of capital for downtown parking. The primary reason here that the expenditures exceed the revenues is we're using reserves for the installation of revenue control equipment, and that's why you've got in the supplies area a pretty large amount this year. I think it's $1.8 million, and a good portion of that is for the installation of revenue control equipment. That's all those new little card readers that we're putting in. So this was a planned use of reserves. We always expected to use more money this year than revenues, and actually I think we're pleased that compared to the last about 3 years, that revenues are actually meeting what we expected. They're actually a little ahead of where we expected them to be, because we have seen a decline in downtown parking revenues the last couple of years. So we budgeted conservatively on the revenue side, and we're doing just a touch better than we expected.
Okay, great. Thank you. That clarifies, and I'm confident that you all have your eyes squarely on this, because it could slide and get ugly. Thank you.
Okay, Rudy, one question that I marked when I was reading this. On page 15 of the report, Council Agenda Report, I was looking at the Fleet Replacement Fund and wondering if the asset, I'm looking under expenses, and I'm noticing that the capitalized fixed assets are low. Have we slowed down our purchase of replacement vehicles with respect to the recession in income, or is this an anomaly of time?
Well, my understanding of this item is that they have a long-term plan for all of the assets that are in that equipment fund for the replacement, and they have a time schedule of those. That has actually been slowed down a little bit to provide for a little bit less expenditure so that we can get a little more use out of these vehicles. This varies throughout the year. This is actually a multi-year budget in here, and so it's not all. We're not going to hit 100% of it generally.
Well, that's what I would have expected
Yeah.
to see, and I did see it, so I was just verifying that I had the right reason.
That's correct.
Okay. If there are no further questions, is there a motion?
I'll move to accept the fiscal year 2010 interim
Is
financial
there a second?
statements.
All in favor, say aye.
Aye.
Mr. Samario, further action for the committee?
No, just to note that this is a consent calendar item with council, so we won't be making a report today.
I will
you.
be making a report today.
You will. Thank you.
Thank you, everybody. And meeting adjourned.